Good morning, everybody. Welcome to the game plan. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. All right, so we have a lot to cover today, so we're going to not waste any time. Follow me over to the chart. We're going to take a look at the market blast today, and again, the market blast kind of gives us a little bit of inkling into what's going on in the day. If we scroll up, we can see again what the keys were for the beginning of the day here. We have first-time jobless claims coming in this morning. They came in at 218,000. That was slightly below the consensus estimates of 220,000. So basically in line, right? Anything within a few thousand is considered in line. Now the kicker here, how to analyze this. Basically, we've seen 3 consecutive months of higher jobless claims, meaning more people filing for unemployment. We were down in the high 170,000-80,000 range. I think 3 weeks ago it was 189,000. Then it jumped to 215. Then it jumped to 221. Today we're back down just a little bit to 218. So what does this mean? Well, honestly, anything below 250,000 is still relatively low historically. 250,000 is kind of that pivot point, right? So when I'm looking at these numbers, I'm looking at that 250 marker. As long as we're below, things are generally okay. If you start creeping above 250, that is a yellow flashing light. If you get above 300, it is a red flashing light. Okay, so again, that was key. We have continuing claims falling just a little bit as well to 1.871 million from 1.894 million. And again, generally what that's telling us is people are still finding jobs, even with all the layoffs that are going on in the tech sector. Now, the big kicker here, and many of you guys have pointed this out in comments, is that the government has been a major player in hiring. In fact, on Twitter, I post a lot of these charts showing the government increase in force, in terms of workforce versus the private sector. And to go into that even more so here, take a look at this. And I've really been trying to keep you guys up to date on this type of thing because I do think it's important. So just in the last, basically in the last 12 to 24 hours, major stocks that are publicly traded, Okta will lay off 7% of its workforce, all right, and then Zoom laying off another 2%. Well, you might say, well, 2% is not that big of a deal, but they just laid off 15% last February. So about a year ago, they laid off 15. Now they're laying off of another 2% of their workforce. And again, in these game plans, almost daily, especially during earnings season, I've come to you and I've said, guys, this company laid off 10%, this company laid off 9%, this company laid off 7%, 10%, etc. And again, what this tells me is the private sector is getting weak, but government is still hiring. Now, at some point, that's unsustainable, right? At some point, there will be a point where the government debt can't keep rising, and it continues to rise at this very time, well above now $34 trillion. All right, couple other things here. Now, you guys know I've been saying that I don't believe that we will see a substantial move down to 2% inflation. All right, now again, you could talk about true inflation, this and that, but ultimately what I'm talking about is that I think inflation is actually going to start moving up over the next few months, and we'll get CPI numbers out in the coming weeks and PCE numbers and more. Now, again, I'm saying here that I believe that we have probably put in the trough of inflation, meaning the lowest point here, but I think it's going to start to move up. One of the reasons, and again, this is just one of many, Boeing workers are basically willing to go on strike unless they get a 40% pay raise. Now, again, remember the auto workers, remember, and by the way, I'm all for people getting raises. I want to be clear, but we also have to understand the repercussions. As everyone from McDonald's workers all the way up the chain are getting paid, 50% more, 100% more. And by the way, some of the lower end workers have gotten increases of upwards of 100%. That is inflationary. It's more money in the pockets of people. They then have a bigger demand for goods, right? There's more competition for buying that same widget, if you will, which is going to drive up prices ultimately, right? Now, again, will AI maybe help? Yeah, I mean, as AI gets more in depth and better, it may help bring that down, but at least in the near term, over the next few years, it probably isn't at that point just yet. All right, so that's something to watch for here as well. If we look at Disney rallying more than 7% this morning. Very nice move on Disney. They had good, solid earnings. The stock, again, and I've talked about this, right? We talked about this yesterday. If we take a look here at Disney and we look, so this is your pre-market data, right? So we have Disney, big move up on earnings and basically sideways chop yesterday into the nighttime, this morning into the open here as we get into the open. But if we go to the daily chart, I want to show you this, right? if we zoom out on the daily chart, were we at the highs on the Disney chart, or were we at the lows? Were expectations way up here, or were expectations down here because of where the stock price was trading? And one of the things we can see very clearly is that back here, I mean, this is just going back to 2021, Disney was basically a $200 stock versus where it closed yesterday at $99. There's a correlation here. Stocks, again, that are good, solid companies that have been out of favor, the bar for their earnings is lower than a stock that has had a 100, 200, 500% run going up into earnings. Investors need a lot more from the earnings to continue to push that stock higher, right? So again, there's that correlation. Now, by the way, that doesn't mean every company that's down near at lows is going to go up on earnings, right? I mean, if a company underperforms even those expectations, it'll still go down, and PayPal could be a direct example of that, which we'll look at in just 1 second. Now, let's just take a look, right? So right now, I think last I checked, Disney was trading at around 107. Let's look at the chart and see where we may have some opportunities for resistance on this level. So the first area I'm seeing here, let me just take a look. There is a gap fill today right here at 110.5. So again, I don't know if this will be a trade for me. I again evaluate this stuff in real time, but again, there's a gap fill right here at around 110.50 that probably starts to work as first resistance. If it gets through that, you have this pivot high right up here that can be a potential secondary level, but that is not until 118. All right, so there are your first key levels on Disney per the chart. The other thing to keep in mind, guys, I don't know if you guys saw this, right, is that there was an inverse head and shoulders here. All right, so let's in fact draw this in. I want to draw this in for you guys here. Let's break it down and actually draw it on the chart. So here would be your shoulder, right? Here would be your head, okay? And here would be your shoulder, right? And then obviously there's your breakout there. So shoulder, head, shoulder, it broke out going into earnings, which was a bullish signal, right? And then ultimately, if we look at a measured move, let's do that measured move tactic that I have taught you guys of how we can decipher where these things can ultimately go as a target price. And what do? We take the lowest point on the chart, we drag it up to the neckline. Okay, so we take that distance, which is approximately $18.70, and from the breakout, you add that same amount in, and that puts us kind of smack in the middle of those two target zones. All right, so again, just to go over this real quick here as we go through. All right, so again, we have our low point right down here to the high point. We take that distance. This is basically using the measured move technique on an inverse head and shoulder breakout. And we take that distance, we add it to the breakout point. You have to take the point where price breaks above. And again, that gives us a zone. So basically what I'm saying is that you're looking at anything between, I guess, about 110.5 to 118.5 as a target price on Disney to the upside before it runs into significant resistance. All right, now let's finish up here and let's just go back to our stats here. If we look at ARM again, it is a semiconductor company. Now, the first thing that strikes me about ARM Holdings is that it's up massively on earnings. If we bring up the chart here, we can see again, initially it had an insane move where you had even the talking heads on TV being like, dude, this is insane. This is literally insane. But if we look at this from basically 75 bucks or so all the way to the high near 110, it's consolidated around 97. But what about the chart? Now, this was a recent IPO. And the one thing that strikes me is that even as a recent IPO, which debuted around the $65 to $70 level, really think about this, guys. This was earlier. This was basically just around when NVIDIA was, what was it, maybe around, I don't know, $400. Right? So again, you're looking at a chart where a lot of semiconductors, this is where it debuted and it kind of fell off that IPO. And then even here, from where it opened for trading, it was only up about $10 or $9. Now compare that. Think about this. Compare that to the insanity of something like NVIDIA, where if we go back to September of last year, and by the way, I apologize. I think I said, yeah, it was, let's see, right here, September. Where's September here? So in September, we were around 400 bucks. So we've basically gone up from 400 to 700 on NVIDIA, but this semiconductor only went up about $10, right? So very small relative move. So essentially what we're seeing is ARM Holdings is playing catch up. Now, why is it that we're seeing so many semiconductors, or is it a good thing that we're seeing so many semiconductors go insane? Like, look at AMD's chart, ARM, I mean, you could go on and on, ASML, AVGO, obviously NVIDIA, SMCI. What is this telling us? And this is the kicker, guys. As good as it is for those companies, what it's telling us is they are breaking in to the AI chip business. And what that means is more competition for the likes of NVIDIA. Now, remember this, guys. Remember when Tesla was at its highs back then, right? We can even go to the Tesla chart here. Let's bring it up right now. So let's flip over to the Tesla chart. So obviously Tesla's at the low end of the range. We've talked about this. But if we go back to the monthly chart, when Tesla was trading up here at this insane, I mean, this was virtually the same, by the way, almost the same type of chart as NVIDIA, right? So again, in fact, look at that. Same move up, and then you had this, and then the final move up. And I just want to show you, actually, that's just something that I'm seeing right now, is if we go back to NVIDIA, same sort of thing. Let's flip over. This is the weekly, but that's the same sort of thing. In fact, let's go to the monthly chart here. There we go. All right, so if we look at this chart, same sort of pattern formation as we had on Tesla. Up, sideways, and then your final move up. Now, where it ends, no one knows, right? I certainly don't. I would think it would be somewhere around this range. But again, going back to Tesla, same exact move, right? You have the up move, and then the final move up. Now, my point of bringing this up is that remember how all of the other EV players started to play catch up? We saw Fisker, we saw Lucid, we saw, NIO. All of these other players began to go nuts to the upside following Tesla up. Ultimately, what they were doing was they were starting to put out cars, electric cars, and it became a situation where there was a lot more supply coming onto the market. And what does that do to margins? It crushes margins. So again, if you look at NVIDIA's margins over the last 12 months or so, incredible, like 80% margins, incredible. But again, watch when NVIDIA reports in early February. I think February 3rd, the question I would have is there any break on their margins yet? Are margins beginning to come down? Because all these other players like ARM and like SMCI and all of the rest of them are all starting to put out these chips, right? AMD just came out recently and said, hey, we now have an AI chip. All right, anyways, I digress there. But again, I do think that's worth it. Just going back to the chart on NVIDIA, I continue to think that I'm very curious about this bigger trend line right here, pivot point right down here. And again, we have this line to this line. To me, this is really, really a big deal right here. If it can get through this, that's even more impressive than it already is for this chart. But again, this is a big level. I'd say 700 to 710. This is a big, big level for NVIDIA. Remember, this is a monthly chart, so could it pierce? Yes, but I want to see at the end of the month, are we above this line or below this line? I will make sure to check back in with it with you guys. All right, couple other charts I want to go over here real quick, guys. I do want to talk about Hershey, right? So Hershey's an interesting chart. They reported earnings today. And again, if we flip over to Hershey here, we can see that this is the daily chart. This isn't your pre-market data yet. But again, just recently I was in this with members and we took a small profit on it. It had popped up above this line and I said, all right, let's take 4%. I think it was a 4% gain, give or take. But one of the things that I'm noticing here is you do have a potential breakout right here. And with earnings, it's trading down a little bit on earnings. Now you might say, well, why is it trading down on earnings? Well, because honestly, cocoa prices, right? Chocolate prices have been sky high. In fact, look at this chart. This is, talk about inflation, right? If you're someone who loves chocolate, yikes. Because look at the move on chocolate here. This is the cocoa cash contract. Look at this move. What is this, NVIDIA? Look at that vertical move here on this. And again, what I would say is this is hurting Hershey's margins, right? Hershey's a chocolate company. It is what it is. So this is hurting, but the reason why I'm intrigued by this is at some point this chart will have a pullback. And as soon as that happens, for me, I would be interested if Hershey today, and by the way, if we look pre-market, let's see where it is. Pre-market, it's trading just around 190, right? So check that out right there. If Hershey can hold over the next few days and stay around 190, I think you might actually get this nice opportunity at a retrace to the scene of the crime, right? So what do I mean by that? Well, this pivot high right through here, right? All of these highs. Here we had a breakout. It comes back in. Guess what level this is right here? 189 to 190. That's a retrace to the scene of the crime. And basically what I'm saying to you is that if you start to get that chocolate price, that cocoa price to come back in, that'll make their margins better, right? Lower input costs. And ultimately, this could be a very interesting trade. All right, so again, just something to keep in mind here that I'll be watching today as price action continues. And just to go back to the cocoa price, I mean, look at that run. That's incredible. You're talking about on this commodity from this low here was under 4,000, and it's now trading at 50, almost 5,500, and that's just since January. Guys, that's January. All right, this is literally just since January. So we're talking 1 month of basically a month and a half ago, 6 weeks ago. So again, let's just say here, all right, so if we look at the scene of the crime, let's just say at some point this year we pull back there. Think about what that does to margins, potentially giving us a investment or trade opportunity on Hershey. And by the way, in recessions, let's just say we do go into a recession. Would chocolate sales go down? Probably not, right? You could even argue that more people will go to chocolate as it's kind of make you feel better type scenario there. Okay, so that was just something I wanted to talk about there. We can quickly look at Tesla's chart here, guys. Again, remember, I was bearish on Tesla when we were at the upper end of the channel right up here. I said bullish just a couple days ago in the near term. I still think we could go back to the low 200s here just in the very short term. Again, longer term, it's tough to know. It depends on if we do enter a recession in the second half of this year or not. All right, so those are a couple charts I want to go to. Follow me over to the other board here, guys. So what we're going to do now is we're going to look at Bitcoin. Now, Bitcoin may be at the verge of breaking out here. In other words, it is above the level. I want to see, does it confirm today? And I said this yesterday in a couple notes. I said, listen, if there's ever a market where Bitcoin should be like ripping higher, this is the market right now. To see companies go up day after day, like an NVIDIA adding $400 to $500 billion since January in market cap. That is literally Tesla's market cap was added, a whole Tesla was added to NVIDIA just since January. I mean, think about that. But my point is that Bitcoin is a risk asset. Crypto is a risk asset. This is the perfect period of time for crypto to go. So if it doesn't go here, that's a big issue. But if we look at the chart here, it does look like it has moved above, right? So basically what I've been telling you guys here on the charts as we scan through is that essentially what we have is we had this trend line, and we knew it was resistance here, broke out, support, 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 broke down, resistance, flag pattern. Remember I talked about this just the last few days saying it has this window to break out. And sure enough, we got the close above yesterday. Watch to see if it confirms. If it confirms, you may be able to head back to the high up here. Now again, I covered my short for about a 10 to 11% gain with members when we were down at 38,500. I haven't reshorted Bitcoin yet because again, there's too much risk of this melt up coming over from the stock market into crypto. But I will be looking at certain levels and I will make sure to give you guys a heads up in the game plan if I decide to stick my neck out and try to short this, okay? So again, I'm sure that's not popular with a lot of the perma bulls, but it is what it is. I'm a trader. I go long, I go short, I go long, I go short, just the nature of the beast. Okay, so let's go on to a couple other charts here that I want to show you guys. We can talk about Ethereum. Ethereum has had a nice little move here as well. It still does have a ways to go to get back to its highs, but one of the lines to watch right here is right here, guys. See where all we kind of came down and we bounced right here before breaking down? That is now resistance. It's right underneath $2,500. If you can get through this level on the chart of Ethereum, you should be able to go back and retest this high pivot. On the downside, we always want to look at both sides of the market. A good technician is always going to look at both sides here. This here continues to be your support line. So your support line's just above 2,200. As long as you stay above that level, again, it can be a net positive, but if you break this level, that's where trouble can really start to come in. All right, so those are your levels on Ethereum. I do want to flip over to gold. Take a look at gold today. By the way, the dollar is moving up pretty strongly. We had a few pullback days on the dollar, but the dollar again is starting to gain traction. That is pushing gold a little bit lower today. But again, I did put in a new little wedge pattern formation here for us to follow. This is just a short-term wedge, but nonetheless, we can see here, right through there and right through here. Now, if we break here, there's a little support here, and then the bigger support would be down around 1975. All right, if on the other side we break this one, you test the highs, and I think that's the beginning of the bigger breakout to the upside on gold. All right, couple other things. I do want to touch base on oil here. Oil, again, continues to bounce beautifully off of the same levels we've talked about. And again, really remarkable how this chart played out, right? We had the breakout here of the inverse head and shoulders, just to show you guys again, classic inverse head and shoulders. My target was 80 to 83. It got to 79 and change right here before stalling out. So it didn't quite achieve my target. Then it came down, but look at where it went. Take the low to the secondary low, connect a line. It gives us a third low right there. And again, if you don't believe in technicals, look at that. Look at the bounce it had here. Now, remember what we talked about yesterday. The angle of the bounce is very important here. This is vertical so far, so that's good. That's strong. But if it gets to flatlining more like this, and it goes like that, then you can start to see a reversal. But right now, it's a very vertical move and a very solid move here to the upside. So oil back to $75 a barrel. Now, oil again, right, I showed you the cocoa chart, right? The chocolate chart. That is incredible. If cocoa was like something like oil, it would be very inflationary, but because it's not one of the major commodities, it is not. But I do want to just mention here is that there are some other charts out there that while they've been beaten down, they should be watched as a potential breakout candidate. And this is, again, you know, you start getting inflation within the food market. And I don't know if I mentioned this yesterday, guys, but I was reading this article how like a Big Mac, in some states, a Big Mac meal at McDonald's is now $18. Like, holy crap. Like, what the heck? You know, I mean, I go to Chipotle and I get a bowl and I get, you know, a side of guac and this, and it's like almost 20 bucks. It's like, whoa. I mean, I can't honestly, families, I don't know how you do it. Like, seriously, it's insane. It is really insane to feed your family these days. But look at this chart pattern here on wheat. Now, wheat has been beaten down. Remember what happens. As we had that pop on the back of what was going on with Ukraine, and Ukraine wasn't going to be able to plant as much grain, every other place planted massive amounts because price was up so high. So this is something to remember. When you see a pop like this, the reason why it doesn't sustain itself is because the farmers say, holy cow, I can get this much for wheat. I'm going to plant 100 more acres each, right? And before you know it, there's an oversupply. But eventually, as price drops, farmers say, wait a minute, it's not profitable to plant this much anymore. Let's cut back, and that's where you can get the up move. So one of the things I'm looking at here on the wheat chart is this low right here and this move up, and then look at that trend line flag pattern. Now, it hasn't broken out yet, but you start to get a move above here, and we get a breakout on wheat, and then all of a sudden, you're talking about potentially starting to see more and more of the commodities start to move, and this is where inflation, which is now CPI-wise around 3%, can start to move back up towards 4% and create a hefty pickle for you-know-who, the Federal Reserve. Now, let's go lastly to natural gas real quick here. Natural gas continues to move lower. Remember, yesterday I told you that at around 199, I added back what I had sold for a small profit. As of now, it continues to move lower. It's around 195. But again, I am watching to see if it can gain some traction here. The kicker for me is this, guys. If you want to know where you really get more bullish on this thing, it's right here. See this little sideways area? You need to get, so it chopped sideways and then broke down. You need to get above that level. Basically what this area is around the 210-ish area, 210 to 215. If we can recapture 210 to 215, then I think you actually head much, much higher. As long as it stays down here, it's still very vulnerable for more downside. Now, the beauty for me is that I inch in with positions, right? So I'm only in, basically I had an initial position, I bought another initial position, still not my full position. I sold that that second position for a profit, then bought in here down below, and I can add a little bit as we go down, because I still think ultimately natural gas will have a snapback at some point back to 250 or so, maybe 265. But in any case, just want to keep you guys updated on what the levels are. All right, back to center screen we go here, guys. Thank you as always for coming out and joining me every day. Your comments continue to blow my mind, and I really do appreciate the support. You guys are awesome, seriously, and I love that you guys pay attention. I love that these are so educational for you in terms of understanding charts. I love that there's nothing else out there on the internet, and I promise you, when we get to 100,000 views, I will be giving away gold and silver bars like it's going out of style. So you guys, again, we're going to get there at some point. Tell your friends, tell your family, and we'll do it and rock it out. Take care, guys. Have a great one.